Hello, it's Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 2nd of April, 2007. Let's go ahead and take a look at some stocks for trading on Tuesday. The market is starting to look a little bit more bullish, and yesterday we had Qualcomm on, got an entry in that. Today it's looking like Adobe might be another good large cap stock that could participate in some strength with the overall NASDAQ 100. So we're looking at the daily chart here. You can see the stock broke out past resistance at about $41 a share just a couple weeks ago, and that resistance has acted as support here on the pullback. And you can see the pullback came on somewhat of an increase in volume, but it's really held up very nicely in here, and I think that the risk is limited at this point. So if we take a look at the weekly time frame, you'll see that this is in the monthly time frame. You'll see the stock's at all-time highs here. So this is a stock that is either going to fail miserably or could continue nicely higher, maybe even up towards 45 or so. But as I like to say, that's not going to be our objective. That's more of an investor's time frame. What I'd like to see here, looking at a 10-minute time frame, you can see there's a little bit of resistance here at about 41.75. 41.70 is where I'd really like to purchase the stock above. Here's what I'd like to see happen first. I'd like to see the stock pull back to 41.55 and then to buy it above 41.70. I think just a little bit of a pullback and then some strength. It ought to take this 41.75 level out. If you want to be a little bit more conservative, wait for it to take out that 41.75 level. That is the area of resistance. But we do have these higher lows intraday as well. So we've got these repeated tests of resistance. The buyers are getting more aggressive price-wise with these higher lows, and they're being very persistent in terms of time as well. So I think you can see it move on a break past 41.70. We then put a stop at $41.40. So only risking 30 cents in a big cap stock like this. And our target in this case would be 42.75, so right around here, although I think it can go higher than that. So just to recap, look for a pullback to 41.55, buy it above 41.70. Our stop would then go at 41.40 and a target of 42.75. That gives us a risk-reward ratio here, 30 cents of risk with that stop and $1.05 of potential profit. CDNS, this is Cadence Design. They used to be CDN, but I guess they're NASDAQ. Anyways, the stock is banging up here against these highs for the year, and we've got a real nice tight range just underneath those highs. So I think it's getting ready to break out here. And you can see that these are multi-year highs. In fact, this was a very important breakout, what we saw in the daily chart just back in here in late January, early February. That corresponds right here. So we've got a big breakout, really. And I think this stock could probably continue up towards that 22 level or so. In fact, that's going to be our price target, is $22 a share. So our price target is $22 a share, but you can see here that late in the day it got a little bit more strength than I'd like to see. So I'd rather see it pull back down towards $21.15 and then to purchase strength above $21.20. So see it pull back at least to $21.15. If it goes a little lower, that's fine too. But the object is to avoid buying it on the weakness. Instead, buy it on strength above $21.20. And our stop could then go at about $21.02 right down here. And with a target of $22 a share, that would give us 18 cents of risk for the opportunity, hopefully to make 80 cents in shares of Cadence Design. Next up, we've got shares of OpenText, symbol OTEX. And you can see that this stock had a big breakout as well, just about mid-February. This old resistance here at about 21 bucks a share, or 20.5, acting as support on a couple of occasions, and the stock is stair-stepping higher, it looks like, as this old resistance is now looking to act as support as well. Looking at a weekly time frame, you can see kind of the same thing as that last stock. Had a very important breakout here on a longer term time frame, and it looks like, so there's that, and it looks like it ought to continue up. Good, a good level stage 2 uptrend might take it up towards that level. But what we're going to look for in here is a buy of strength on OpenText. We're going to look for it to move above $22.15. That's this level right here. where it's had resistance a couple times. Same thing I pointed out on an earlier stock is we're getting more aggressive buyers because it's making higher lows. And what that's telling us is we're not the buyers aren't taking control at 2170. Instead, they're getting more aggressive, saying I'm not waiting for a pullback to 2170 before I start buying. I'm going to buy at 2180. I'm going to buy 2190, 22. So they're creeping up. The bids are getting more aggressive. They're not letting the stock pull back as much. And breaking past 2215 could be the catalyst that gets this thing. It provides a higher high to go along with those higher lows. So that would be the definition of an uptrend on the short-term time frame. And obviously, we're in an uptrend on the daily time frame as well. So we would have trend alignment at that time, alignment of trend on multiple time frames. So in above 2215, stop down at 2195 gives us 20 cents of risk. Our price target will be conservative at $23 a share, although I think it could go higher. That's 20 cents of risk for the opportunity here to make 85 cents. MDRX is the symbol for Allscripts Healthcare, and although the market is acting somewhat bullish right now, we got to be prepared just in case. So you can see that the stock started breaking down today. It did recover though too. So what I want to see is that I'd just like to see the stock break back below 26 bucks a share. Sell it short below that level. Put our stop just above this area here. So a stop at $26.23. And it looks to me like the stock ought to make it down towards about $25.10. That's this level right here. So that will give us the opportunity to make 90 cents, risking just 23 cents. If we get market weakness, MDRX looks like a good one to go to.